Money. Guys, we've got the money man, Zach from Shore Financial on this morning. Let's talk about rates.
I'm the ringleader, so listen up.
This is like a visit from Father Christmas at this time of year. He will make or break Christmas dreams when it comes to property.
Wow. Zach, you've got a new look. You look like Rip from Yellowstone.
Very good. Should have brought my hat.
You look tough, man.
It's pretty consistent.
And Legend, how's it been out there in the money world? So you're out there talking to buyers, you're there talking to sellers. You do a lot of volume, so you're highly exposed to everyone in the market, and you're with the wonderful brokerage called Shore Financial. So you got some good goss for us today.
Yeah, indeed. What's been happening? People have still been buying, definitely. There's still purchases happening. It's a lot of my work, and still a lot of people, rate conscious, but more people conscious to buy now rather than wait for the rate drop. So I think people are being a little bit more resourceful now with, they're spending their money and how they're getting into the property market, because, I certainly haven't slowed down in the amount of purchase applications that have been approved and the amount of people we've been settling. So certainly a lot of activity out there.
I've got to ask the obvious question. What the hell is happening with interest rates in 2025? Because I thought we were going to see a rate cut in December.
Maybe.
You get a crystal ball in here.
Yeah. But you've got the next best thing to a crystal ball.
There are a couple of things that we watch closely. Obviously, everyone sees what the major banks are saying. I think we've got ANZ and CBA saying that there'll be a rate cut in February, which will be the first RBA meeting. I think around the 19th the 7th of February, I think, is the first RBA meeting next year. But there's also one coming up in December, which I think maybe go back 12 months ago, a lot of people expected some interest rate cuts by the end of this year. But I think from the data that we're following and seeing, maybe off the cards this year, and may not be until the middle of next year to reasonably expect an interest rate cut.
Like May.
Yeah, so as I said, ANZ, CBA say February. There's NAB and Westpac saying that it's going to be around May. And look, it is crystal ball sort of stuff. I suppose, the major banks have a lot of customers they'd like to keep happy, and they want new business knocking on the door. So, they're going to tend to say things maybe a little bit more aggressively than what might happen in actual fact. For an unbiased opinion, there's the RBA rate tracker, which from the ASX gets adjusted, almost daily.
Yep.
In terms of what the markets and the traders are interpreting based on, I guess, a whole range of economic factors that they trade to. And that shows that, May to June, maybe even July is when the first rate cut is expected. Now, it's all fluid on, economic data, domestic and international. What the RBA said recently is that they need to see at least 2 quarters of sustained inflation in that band.
Right.
So the target that the RBA wants, we're actually already there with one of the measures of inflation, but they need to see a couple of quarters. So we won't actually see the next quarter of data until February, being the December quarter.
Yep.
And I guess what we saw from a monthly perspective being October, that's just gone. So we're obviously in December now, but it takes a month for the data to come out for to be reported on.
So to make it simple for people, we've done 1 out of 2.
1 out of 2.
Sort of quarters in that good band, and now we're going to do another, or
Well, the interesting thing was about October. Yeah, so in short, yes, and just, but they want it to be, between 2 to 3, so 2.5.
Yep.
We got to, I think, 2.6 last quarter, but now we've seen a drop to 2.1. But that's the price-driven inflation, which is including, say, things like the energy subsidies, the things that have reduced naturally in our domestic economy, and then you've got the underlying inflation measure, which has gone the opposite direction. So we've gone to 2.1 with all the price-driven volatile goods, and then keeping them out, and more of a broader economic model. The underlying inflation's gone back to 3.5. So I guess there's a few things externally that are impacting everyone's interpretation and obviously our economy. So we'll see what happens in the December quarter, but I think this year is off the cards for a rate cut, and I'd say June or even the July meeting is after the May meeting would be
Right.
I guess in line with what the markets are saying, which is the unbiased opinion.
Wow.
Hey, Zach, if I was to say to you, who gives a shit about interest rates? It's at a 20 or 30-year average at the moment. Get on with life. I just feel like people are watching rates so hard and so intensely. I feel like they're watching everything. They're waiting for an election. They're waiting for this. They're waiting for that. It's like, just get on with what you do. Why are people so into where are the rates? Where are the rates? Where are the rates? It's it seems like it's never been like that, more so than now.
Yeah, I couldn't agree more. I think, and you've said it yourself, Mark. If it bleeds, it reads, and that's what the media can play on. Is what's still very topical. But I think I get the question a lot: is when should I buy my property? And obviously, I can't give the financial or property advice, but I can tell them how much they can borrow. And the general response is, well, if you find something that you like, that you can afford, what's stopping you?
Yeah.
Because another famous quote from you, Mark, is
It's full of them.
it's not timing the market, it's time in the market. I think you told me once upon a time.
Timing, it's time in. That's right. And another one is, I get asked about the property market. I'm like, look, it's been really good the last 100 years, and I think will be equally as good the next 100 years. It's, you know what I mean? It's like, if you're going to watch that market every day or every week or every month, you're going to give yourself a heart attack. The bottom line is it's doubling every 10 years. It's a long-term market, and all this stuff's long-term.
So we're on average, and you'd say this is just a mere blip on the long-term scale of things.
Well, house values have done more than double over the last 10 years in our housing areas on the northern beaches. They've done about 130%, so double plus 30%. And units have underperformed. They've done about 70% in all of our unit suburbs on the northern beaches. So there's a big gap, which you could understand when it was a 2% interest rate, everyone got into a house. Hence, here we are with the gap between houses and units.
And what are people saying at open homes? Like, are you still seeing and hearing that people are, watching rates too often and too closely to maybe sway them from making the decision they need to make?
Lisa's put a good comment in here.
What's Lisa got to say for herself?
Lisa's talking about the waiters. There are people that come through and say, I'm holding off. I think prices are going to change next year. But a lot of people also telling us that their borrowing capacity's changed a huge amount.
Since 2 years ago, absolutely. If you could borrow $1 million 2 years ago, you can now borrow around 570.
Wow.
So it's been a big hit with the interest rate rises.
Can you say that again?
So let's say you could borrow $1 million on your income 2 years ago.
Yes.
You can now borrow around 500 to 600,000.
That's massive. That's huge.
So that's looking at about $120,000, $130,000 salary, up to sort of $150,000 in income to be used in servicing. It's gone from about 8.5 to 5 times your income.
Wow.
Are you finding clients that took the $1 million mortgage 2 years ago are struggling now to repay that?
Not particularly, and that was a lot of what was spread across the headlines, is that the infamous mortgage cliff and the expectation of people to struggle. And I mean, it happened, but no, it wasn't a cliff. It was almost like a bit of a roll off. Like there wasn't a distinctive line where everyone freaked out. Obviously, they were staged in terms of how much you fixed on your $1 million mortgage, if it was 1, 2, 3, up to 5 years.
Yeah.
So we've still got people coming off 5-year fixed at 1.86, like just. There's probably the last little tail end in January, and they're they're going on to. So some of them have done really well. They've smashed their repayments, and they might have put a little bit extra, and they've put extra in their savings, so that now they've still got that bit of buffer to rely on, or they pay it straight in before we refinance them, and therefore they've got a lower loan to refinance. But look, they're going on to at the best variable rate would be 5.94.
Wow.
By comparison, you've got a 1 year fixed at 5.79, 15 basis points lower than the variable, but you don't get an offset account. And if rates do come down, say 25 basis points in the next year, well, you're going to be paying a little bit more and you're going to be locked in.
And are people nervous for the new year if they're in that position, or are they taking it in their stride?
I think there's quite a few people that have that first discussion that might have bought their first home in that historical period of ridiculously low interest rates.
Yeah.
And so they are nervous, but once we guide them through the serviceability conditions and show them that it's possible for them to afford their repayments, it is just them then about looking at what they've got on in their life, and if they do need to reduce discretionary spending, if we do need to consolidate any credit cards or car loans to help streamline their repayments, which again we've been doing a lot of, because people did take out credit cards, personal loans, car loans, again because they weren't going overseas, so they had a bit more fun locally and got a bit more done here.
Yep.
But now it's come back to bite them. So there's usually a bit of wiggle room with that consolidation factor. And say with credit cards or personal loans and car loans, that changes your borrowing capacity, or reduces it rather, on a 5 times multiplier.
Crazy.
4.5 to 5 times multiplier. By example, if you've got a $10,000 personal loan or credit card, then you can take 45 to 50K off your borrowing capacity. So that could be the difference in refinancing, it could be the difference in purchasing. So getting rid of that debt or consolidating it against equity in the house, yes, it drags out the period for repayment. There's probably more interest, but at the moment it's about cash flow for people.
Yeah, couldn't agree more.
So instead of having 3 or 4 separate repayments, we put everything in one basket and reduce it, say from $2,000 a week down to $800 a week, because we've really brought it in and given them some breathing room.
13 minutes flies by when you have
Zach, how do people find you if they want a loan?
You can call me, or you can ask Billy for my details. I'm sure he'll pass them on. Otherwise, Shore Financial is the brokerage I'm at, and I am a credit advisor there. So you can find me on their website. But otherwise, I guess we'll leave details in the comments or show notes.
Absolutely. What are turnaround times on loans? More pre-approvals?
Turnaround times?
Yeah.
Actually, I just had a thought. You can actually see me on the back of the list.
You can.
So come into Novak, because they're free and they've got all the properties you'd ever need. And on the back page, you've got, some
all the cafes. Go into any mortgage brokers in DY, and you'll see the list on their coffee tables with Zach on the back of it.
Zach on the back.
All the lawyers.
But,
Zach on the back.
For turnaround time for pre-approval?
Look, some of them are as fast as flicking through your magazine.
Wow.
But generally, it's 2 to 4 business days. You've got lenders like Macquarie and Suncorp who pick it up in an hour, and will give you an assessment. Almost the same day. Sometimes a conditional approval the same day. So, yeah, it depends.
Will that slow down over Christmas as they sort of go on to skeleton stuff?
Yeah,
trying to get a loan.
There are cut-offs, and I guess the big thing is which solicitors are on through the Christmas break if you're purchasing.
Yep.
And a lot of the bank solicitors do take a bit of time off. There are skeleton crews on, but I'd say I think from the 17th or the 23rd of December until maybe the 6th of January, it'll slow down.
Okay. Good to know for a buyer. Really good to know. But if they need help, they can call you.
I'll be on. I've already had my holiday, so
That's it.
I'll be here for you, mate.
Nice. Welcome back, Zach. Thank you again. And we'll, if anyone needs this lovely man or his advice, you know where to find him. Have a great day.
You too.
Take care.
Take it easy.